All right, so today we're going to be taking a deep dive into real estate financing. It can be a little bit intimidating, to be honest. So many confusing terms and jargon. So to try to shed some light on this whole process, we're going to be looking at some material from WSV Group. And they're a company that kind of specializes in helping people navigate this whole thing. Now, in their materials, they've highlighted 4 key tips. And I'd love to get your thoughts on them.
Yeah, that sounds like a good plan. It's really easy to get caught up in the excitement of finding like your dream property,
Yeah.
but having a good understanding of the financial side of things can really make or break the whole experience.
Definitely. And actually, their first tip is all about knowing your financial standing. Now, that seems pretty straightforward on the surface, but is there more to it than just checking your bank balance?
Oh yeah, absolutely. It's really about understanding, the whole picture of your finances. That's your income, your expenses,
Right.
debts, even your credit score. It's like, think of it like this. You wouldn't go on a road trip without checking your fuel gauge and mapping out your route, right?
Right. Well, buying a property, it's kind of like a big journey as well. And knowing your financial standing, it's like that starting point. So you can set realistic goals and avoid any potential detours later down the line.
Yeah, that makes a lot of sense. Speaking of mapping things out, WSV Group, they mentioned something called personalized financial assessments. And I thought that was interesting because it seems like it goes a bit deeper than just getting pre-approved for a mortgage.
You got it. Pre-approval is kind of like a quick temperature check, whereas a personalized financial assessment, it's like a full body scan. It's not just about how much you can borrow, but how much you should borrow, taking into account all your individual circumstances and your long-term goals.
Yeah, you see, so it's more about creating a strategy rather than just getting that green light. I'm starting to see why they emphasize this as like the crucial first step. But honestly, sometimes I get so excited about house hunting that the numbers kind of become an afterthought. How do we stay grounded when our emotions are kind of running high? That's such a good point. And it's a trap that so many people fall into. I always tell my clients to think of it as like a two-pronged process. So first, you can indulge in that fun part, envisioning yourself in that amazing kitchen
Yeah.
or that beautiful backyard. But then you got to put on your analytical hat and get real with those numbers. Calculate your debt-to-income ratio. Analyze your spending habits. Be really honest with yourself about what you can comfortably afford.
So it's about finding a balance between like dreaming big and being financially responsible at the same time. Okay, let's move on to their second tip. Exploring mortgage options. Oh boy. Where do we even begin with this? There are so many different types of loans out there. It's like navigating a maze blindfolded.
It definitely can be. And it's easy to get lost in all the jargon. But let's try to demystify it a little bit. I mean, we can talk about like fixed rate versus adjustable rate mortgages.
Yeah.
But I think everyone kind of knows the basics of those at this point. What I think is more interesting are those kind of lesser known options, the ones that can be real game changers in certain situations. Have you ever heard of a physician loan?
A physician loan. That's a new one for me.
Yeah, so what's cool about this type of loan is it's designed specifically for doctors, dentists, other medical professionals. They often come with some really unique benefits like lower down payments, more flexible underwriting guidelines, sometimes even the ability to skip private mortgage insurance.
Wow. Okay, now that's what I call an aha moment. So it's not just about choosing between fixed and adjustable. There might be these niche options out there that are tailored to your specific profession or circumstances.
Exactly. And that actually leads us to a point that WSV Group emphasizes, access to a large network of lenders.
Yeah, they do mention that as one of their strengths, but how does that actually benefit the borrower? Wouldn't using a mortgage broker get you a similar result?
That's a great question. And it's where things can get a bit tricky. While a mortgage broker can definitely shop around for you, they might not have the same depth of relationships or access to specialized programs that a larger company like WSV Group has. Think of it this way. A local boutique might offer some really curated selections, but a larger department store, they carry a much wider range of brands and styles.
I see. So it's about having more options to choose from, potentially finding that hidden gem of a loan product that perfectly fits your needs.
Precisely. And sometimes those less common options, like the physician loan we were just talking about, they can actually save you a lot of money in the long run.
Yeah, I'm definitely seeing how having more choices can make a big difference. Okay, this has been so insightful already. But before we get too far ahead of ourselves, let's talk about WSV Group's third tip, budgeting wisely for additional costs. Now, this is one I've definitely tripped up on in the past. It's easy to just focus on the sticker price of a property and completely forget about all those kind of sneaky extra expenses that pop up.
Oh, believe me, you're not alone in that. It's amazing how many people overlook those hidden costs, and they can really impact affordability.
Right, you're talking about things like closing costs, property taxes, homeowners insurance, potential maintenance costs. The things you tend to forget about when you're daydreaming about those granite countertops and that perfectly landscaped garden.
Exactly. And it's not just about having enough for the down payment. These additional costs can add up to thousands, sometimes tens of thousands of dollars, for example, in your region. Average closing costs right now are around 3% of the purchase price.
3%. Wow, that's not insignificant at all. Suddenly, that dream home might need a bit more saving up for. No wonder WSV Group really emphasizes creating a comprehensive budget. But what does that actually look like in practice? Is it just about adding up all the potential costs, or is there a deeper strategy involved?
Well, it's definitely more than just adding things up. A comprehensive budget should really factor in not only those upfront costs, like your closing fees,
Mhm.
property taxes,
Yeah.
but also those ongoing expenses of home ownership. So things like your utilities, maintenance, even potential HOA fees, if those apply.
Okay, so it's about taking that holistic view of your finances, understanding not just the initial cost, but like the long-term commitment as well. Like, sure, you might be able to swing the down payment and the closing costs, but can you comfortably handle that monthly mortgage payment plus all those other expenses? It's about making sure you're not just buying a property, but that you can actually afford the lifestyle that comes with it.
Exactly, and that's where I think WSV Group's approach can be really valuable. They say they go beyond just crunching the numbers and actually delve into your lifestyle goals, helping you create a budget that really aligns with, your vision for homeownership.
That makes a lot of sense. It's not just about being able to pay the bills, but being able to enjoy the experience without constantly stressing about finances. Speaking of stress, I have a confession to make. I once completely underestimated closing costs and ended up having to scramble to come up with the extra cash. It was not a fun experience. Any tips for our listeners on how to avoid a similar fate?
Oh, I've heard that story countless times. I think one of the biggest mistakes people make is not getting a really thorough breakdown of those closing costs early on in the process. Don't be afraid to ask your lender for a detailed loan estimate and go through it carefully. Look for any fees that seem excessive or unnecessary, and don't hesitate to negotiate.
So it's about being proactive and informed, not just passively accepting whatever numbers they throw at you.
Yeah.
Okay, before we move on to their final tip, I wanted to go back to something you mentioned earlier. The whole large network of lenders that WSV Group says they have access to sounds impressive on the surface. But how can we as consumers actually evaluate if that translates to better deals for borrowers?
That's the key question. And it's where you need to be a bit skeptical. It's easy to get caught up in the marketing, but the real test is in the data. What you want to look at are the interest rates and loan terms that WSV Group has actually secured for their clients, compared to industry averages. Are they consistently beating the market? Do they have a proven track record of getting loans with lower interest rates or more favorable terms?
So it's about looking beyond the hype and actually analyzing their performance data. Do they walk the walk or just talk the talk?
Exactly. And while testimonials and case studies can be helpful, it's really important to look at, consider the source and look for independent reviews and ratings. Anyone can cherry pick positive feedback. You want to see a consistent pattern of satisfied clients who've actually benefited from WSV Group services.
All right, let's move on to their final tip then, which is focused specifically on their own financing solutions. They advertise competitive rates and flexible terms, which sounds appealing on the surface, but how do we cut through the marketing jargon and really assess if these claims hold up?
Yeah, that's where a healthy dose of skepticism comes in handy. Don't just take their word for it. Competitive rates should always be compared to what other lenders are offering. Do your research. Get quotes from multiple banks, credit unions, online mortgage providers. See how WSV Group stacks up against the competition.
So be an informed consumer. Don't just fall for the catchy slogans. What about those flexible terms, though? What should our listeners be looking for to evaluate whether those are actually advantageous?
Well, flexibility can be a bit of a double-edged sword. It might mean that you can customize your repayment schedule, make extra payments without penalty, or even have options for deferment or forbearance if you run into financial hardship. Those can be valuable perks, but it's crucial to really understand the fine print.
What do you mean? What kind of potential downsides could be lurking in those flexible terms?
Well, often flexibility comes at a cost. For example, a loan with a more flexible repayment schedule might have a higher interest rate compared to a traditional loan with stricter terms. Or there might be hidden fees associated with certain flexible options, like prepayment penalties or higher origination fees. So it's really crucial to carefully read those loan documents and understand all the terms and conditions before you sign on the dotted line.
So weigh the potential benefits of flexibility against those potential costs. And that brings us back to WSV Group's claim of a proven track record. They make it sound like a sure thing, but we all know past performance doesn't guarantee future results. How can our listeners dig deeper and assess whether WSV Group's track record actually instills confidence?
That's such a crucial point. Past performance can be an indicator, but it's not a guarantee. Look for concrete evidence beyond just testimonials. Have they worked with clients in similar situations to yours? What were the outcomes? Were they able to secure loans with competitive rates and terms? That actually benefited the borrowers.
So look for specific examples of their successes, not just vague claims of a proven track record. What else should our listeners consider when evaluating WSV Group's credibility?
Well, one important factor is their industry reputation. Have they received any recognition or awards from reputable organizations? Are they members of any professional associations? Are they subject to industry regulations? These can all be indicators of their commitment to ethical practices and high standards.
So look for those external validations that suggest they're a trustworthy and reliable company.
Okay, we've covered a
So,
lot of ground here,
yeah.
and I'm feeling much more equipped to navigate this world of real estate financing. But before we wrap things up, I wanted to shift gears for a moment and address something that often gets overlooked in all this talk about numbers and contracts. The emotional aspect of buying a property. It's a huge decision, and it can be incredibly stressful.
You're so right. It's not just a financial transaction, it's an emotional roller coaster. And it's easy to get caught up in the excitement or the pressure and make decisions that aren't truly aligned with your needs and goals. I think a lot of our listeners can probably relate to that feeling. It's a big step, and it's natural to feel a mix of excitement, anxiety, maybe even a little bit of fear. What advice would you give to those who are feeling overwhelmed by the process?
Well, first and foremost, remember that you're not alone. Almost everyone feels some level of stress during this whole home buying journey. It's important to acknowledge those feelings and find healthy ways to manage them.
So take care of your mental and emotional well-being throughout the process. What are some practical tips for doing that?
Communication is key. Talk to your partner, your friends, family, maybe even a therapist about what you're going through. Don't bottle up those feelings. Surround yourself with a support system, people who can offer encouragement and perspective. And don't be afraid to ask for help or guidance from the professionals involved in your transaction. Your realtor, your mortgage broker, your attorney. They're there to support you and answer your questions. Remember, you're not expected to be an expert in every aspect of real estate financing.
So build a strong team and lean on them for support and expertise. That makes a lot of sense. It's okay to feel a range of emotions and to seek out resources and guidance to help you navigate those feelings.
Exactly. It's about creating a positive and empowering experience and not letting the stress and anxiety take over. Remember, buying a property should be an exciting chapter in your life, not a source of undue burden.
That's a great reminder. It's easy to get caught up in the details and forget about the bigger picture, the joy of finding a place to call home.
Absolutely. At the end of the day, it's about finding a space that brings you comfort, happiness, a sense of belonging.
Well, I think we've covered just about everything today. We explored the importance of knowing your financial standing, navigated that maze of mortgage options, uncovered those sneaky additional costs, put WSV Group's claims under the microscope, and even addressed that emotional roller coaster that comes with buying a property. I feel much more informed and prepared to embark on my own real estate journey now. But before we sign off, I have one final thought to leave our listeners with. We've talked a lot about the practical aspects of financing, but don't forget about the emotional side of things. Take some time to really reflect on what truly matters to you in a home.
That's beautiful. It's not just about the numbers. It's about finding a place that really resonates with your heart and soul.
Exactly. What are your non-negotiables? What brings you joy and a sense of peace? Let those values guide your decisions as you embark on this exciting adventure. Happy house hunting, everyone. You know, it's so easy to get lost in those practical details, that we forget about the feeling. You know the feeling a home should actually give you. But we've covered a lot of ground already. We talked about knowing your finances, dissecting all those mortgage options, unearthing those hidden costs. We even put WSV Group's claims under the microscope a little bit.
Yeah, and we even touched on that emotional roller coaster that's kind of part of the whole process.
Yeah.
I think at this point, our listeners are probably feeling much better equipped to tackle their own journeys.
Yeah, I think so too. But before we wrap things up, I did want to circle back to WSV Group one last time. Specifically, their claim of a proven track record. I mean, they use that phrase a lot in their materials, but it always feels a bit vague to me. So how can our listeners really dig a little deeper and assess what that actually means?
Yeah, it's definitely a statement that requires a bit of unpacking. I mean, anyone can claim a proven track record, right?
Yeah.
But the real question is proven by what exactly?
Right. What kind of evidence should our listeners be looking for? What questions should they be asking to assess whether WSV Group actually delivers on its promises?
Well, I think one of the most telling things is transparency. Does WSV Group openly share their data? Things like their average closing times, loan approval rates, client satisfaction scores.
So it's not just about what they say, but about what they can actually demonstrate. Are they willing to back up those claims with real numbers?
Exactly. Look for evidence that they're actually tracking their performance
Sure.
and using that data to continuously improve their processes and client outcomes.
And what about expertise in the specific market that our listeners are interested in? Does that matter?
Oh, absolutely. I mean, real estate is hyper-local, right?
Mm.
What works in one city or region might not work in another.
So it's not enough for WSV Group to just have a general track record of success. They need to show that they have expertise in the specific market our listeners are looking at.
Precisely. You want to ask about their experience in your area. Have they successfully helped other buyers in your city or neighborhood navigate similar financing challenges?
Right. Do they actually understand the nuances of the local market? Things like property values, tax rates, even neighborhood trends, because those factors can really impact your financing decision.
Oh, they absolutely can. And that actually brings us back to the importance of those personalized financial assessments. It's not about just having a one-size-fits-all approach. It's about understanding your unique circumstances, your goals, even your risk tolerance.
And connecting all of that to the reality of that specific market, that's a lot to juggle. It makes me wonder, is it even possible for one company to be an expert in every aspect of real estate financing? Or are there situations where it makes sense to seek out more specialized advice?
That's a really great question. And it really highlights the importance of being an informed consumer. Don't be afraid to shop around, compare services, even get a second opinion if something doesn't feel right. You're making a big investment here, and you deserve to feel confident and empowered every step of the way.
That's such a crucial point. It's okay to ask questions, to challenge assumptions, advocate for your own best interests. It's your money. You have the right to make sure it's being used wisely.
Absolutely. Knowledge is power. And in the world of real estate financing, that power lies in understanding the process, asking the right questions, and ultimately making informed decisions that align with your goals.
Well said. We've covered a lot in this deep dive, and I really hope our listeners are walking away feeling more informed, more confident, and honestly more excited about buying a property.
Me too. It's been a pleasure sharing these insights.
Likewise. And remember, everyone, don't let the process overwhelm you. Embrace the journey. Seek out the right resources. And most importantly, enjoy the thrill of finding that perfect place to call home. Thanks for joining us on this deep dive into the world of real estate financing. Until next time.